So last week, gold didn't seem to react much to the weaker US dollar. How is the metal set up ahead of some key economic data coming out of the US this week? We have Jim Wyckoff joining us this Tuesday. Jim, good to see you.
Hi, Danielle. Always nice to be with you and always nice to pay a little visit to my Kitco readers and listeners.
So let's look at gold. The metal starting the day higher. Is it mostly due to the data we see coming out of China and the EU, Jim, or do you think there's something else at play here?
Danielle, as we started the trading week on Monday, coming in and looking at the wires from overnight, I could sense that much of the marketplace has kind of moved to a summertime doldrums, maybe traders at work thinking about doing outdoor activities after work, and things have just slowed down a little bit. We've become more subdued. We've become calmer. And I think the marketplace is awaiting the next big fundamental piece of news, maybe next week's FOMC meeting. But I suspect maybe for the next several weeks that we might see more of this subdued, slow type summertime trading activity. And what that means for the gold market is probably choppy and sideways trading, but with a downside bias given that the near-term technicals for both gold and silver remain firmly in the bearish camp.
So this week we have some important economic reports coming out of the U.S., including some key inflation data. Jim, do you think we could see gold reacting to this news?
Yeah, gold could react. I suspect that reactions aren't going to be anything significant unless we get a major surprise in some of those reports. But the tenor of the marketplace right now, again, is just kind of a lazy summertime attitude. We did get some downbeat economic data coming out of China and the European Union on Tuesday morning, and that kind of adds to the sideways to lower tone we're seeing probably going to happen this week in the metals market.
Jim, do you think it's fair to say that gold reacts the most to data coming out of the U.S. more than any other country in the world?
Daniela, in my examination of the gold and silver market, yeah, we have the FOMC meetings and the jobs data from the U.S. that impact the gold market. But I would also argue that Chinese economic data from the European Union is probably as important. Maybe recently we've seen more of a reaction to the U.S. data, but when you look at the bigger picture, data from China, data from the European Union, and data from the U.S., those are the three big ones that the gold market watches. And then you throw in the geopolitical surprises that could occur. But I think going this summer, the gold market's going to watch those three big markets.
All right, so on that note, let's get to your Wyckoff market rating for gold and silver this week.
Daniela, I'm giving both gold and silver a Wyckoff market rating of 2.5. That's firmly in the bearish camp. Both gold and silver markets are in three-week gold downtrends on the daily bar charts. The bears are in firm command. When the bears are in command, the path of least resistance for prices is sideways to lower, especially given a lack of fresh fundamental news, and that's kind of what we're seeing this week. We've got, for August COMEX gold, we've got overhead resistance at $1,200, solid support at the March low of $1143.80. For July silver, we've got overhead resistance at $1,650, solid support at the March low of $1,559.
Thanks so much, Jim. You can catch the open with Jim Wyckoff daily on Kitco.com. And next week, be sure to stay tuned to Kitco News. We're headed to San Antonio to cover the IPMI conference. We'll have lots of great interviews from there. In the meantime, thanks for watching, and we'll see you tomorrow.